Welcome to the Options Doctor Stock Options Trading course. In this section, we'll be covering placing orders. Placing orders is quite important. This is a combination of things which range from finding the right strike price, to the expiration date on the option contract, to the order type, such as a market or limit order, as well as good to cancel or a day order. In this video, we'll be covering strike price and expiration. First, we're going to pull up the ticker symbol for Tesla. We'll select trade, then go to trade options. We're going to look at the September 18th expiration date because I feel more than confident that Tesla can move the amount of points I desire within a 2-week time frame, considering today is Monday, September 7th. As we scroll along, you might notice that the further out of the money you go, the lower the option cost or premium is. This is very advantageous, especially when investing in stock options like a Tesla that can move many points within a single trading day. Here we select a 450 call. We enter the desired number of contracts, which are 3, and then we're going to go here and enter our limit order price. Remember, as we enter our limit order price, we always want to buy at a discount. So at this point, we're entering a little bit lower limit price than what's currently listed on the bid and ask. Here, we're going to cover order types. In the first video, we're going to look at the difference between GTC, or good till cancel, versus a day order. With good till cancel, this gives us the ability to have the order set in place for up to 90 days. If it gets filled within that time period, then the order is executed. If it doesn't, for some reason get filled, maybe the price is too far off, then it'll cancel eventually after 90 days, just as a day order would. So first, we're going to go in, type our ticker symbol. We'll select our stock, go to trade, select trade options. We'll select our desired expiration date. Then we'll find our desired strike price, which in this example will be a 393 call. We'll enter the number of contracts we choose to have, and then click on the gear icon on the top right hand corner, turn on good till canceled, and click out of that section. At this point, here we see we have a wide bid-ask spread, so we want to enter a limit price to get a more desirable price on that, or price point on that particular contract. And now our good to cancel order is now in place. Once we find the desired price point, which will be our $47.50 per contract, we select review and then swipe up. And now, until Tesla gets to a particular stock price that would pull that option contract back to $47.50 per contract, then we get filled. If it never got there, then again, each day that order would still be in effect as if we placed a new day order for up to 90 days. In this next video, we're going to take a look at a limit order. Okay, so here we're going to type in our ticker symbol. We select Apple. We're going to click on our trade tab, go to trade options, select our desired expiration date. Now we search for a feasible strike price. Here we're going to select a 125 call. We're going to enter our number of contracts, and then we go here. As you see the limit price or that market order price dropping, that means the price of the stock is pulling back. What we're going to do is enter our own price, which we believe that the trend will continue to go down or pull back. So we're going to select $1.80, which times 100 shares is $180 per contract. We have 5 contracts there, totaling $900, our max cost. We just saved ourselves probably a couple of $100 by entering this limit order. And not only that, you notice we selected more than one contract. because we always want to be able to scale in or out of a trade. And in this case, as we receive more pullback, and let's say the stock continued to run down, then maybe we'd add one or two more additional contracts every so many price, so many points in price dip. So that is how you turn on a good to cancel order, and this is how you effectively enter a limit order price. Be sure to subscribe to the Options Doctor on YouTube at the Options Doctor. Make sure you turn on notifications and like our videos for helpful tips, trading strategies, and new content. Also, follow us on Facebook at the Options Doctor and on Instagram at the Options Doctor for updates and unique content. Also, we would love for you guys to share any of your profit successes with the world as a part of our growing community, and we ask that you send those on the Discord or on one of the social media platforms, and we'd love to share your successes as a testimony to what we teach and how we help to develop new options traders. Lastly is due diligence. As we stated before, you don't want to take anyone else's word, advice, or recommendations without having done your own research first. Our content is intended to be used and must be used for informational purposes only. This is not investment advice. All content in this video is of general informational nature and does not address the circumstances of any particular individual or entity. There are risks when investing. So trading or investing requires risking capital, and we recommend that you do not risk any money that you can't afford to lose. Thank you. We look forward to helping you grow and teaching you about stock options flipping as you embark on this journey in the options trading world.